Good afternoon. This is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking Dow futures. Huge rally today, jumping up over 250 points, over 1.25% on the highs, on a relief trade basically from Irma and a lack of any sort of action from North Korea. Irma came through and hit land on the west coast of Florida, did a decent amount of damage. There was some unfortunate loss of life, not as much as was expected in either category, however. Some estimates were quoting those losses at being near $200 billion, and now it looks like it's going to be a quarter of that or even less. And then North Korea, who did not fire any sort of missile, as the South Korean news agency was reporting they would do prior to Saturday. That doesn't mean they're not going to, but it simply means that the South Korean news agency had it wrong, and we saw the VIX actually drop over 10% today, down back into that 9 to 10 range. Now, the insurance rebound we saw today was dramatic as well. It's the second day of insurance rebounds. There was a little bit of bids into Friday, but today was dramatic. You had stocks like AIG and Travelers rebounding, and the KIE, which is the Spider S&P ETF for the insurance industry, jumping over 2%. Still not breaking out to the upside, as these damage estimates will continue to come through, and we don't even have full estimates from Harvey, but a little bit of relief in the insurance area. Then we have materials strong, we had consumer goods strong, all in anticipation of a rebuild of the two of the 5 largest states in terms of GDP and per capita GDP, Florida and Texas. Florida is number 4, Texas number 2 in both categories. Now, financials led, being up over 1.5%. The financial sector was really, really strong. Now, given that the financial sector is leading, it stands to reason that the Fed, given the outcome of these storms, may need to kind of rethink their position. When you look at the CME Fed Watch tool, that tool is not pricing a 50% probability of a rate hike in any Fed meeting going all the way out to the second quarter of 2018. So the market clearly doesn't fully believe the Fed is still going to do it. And when financials leading like this, the Fed may have to rethink their strategy to get the market to believe that through this drop in GDP from the storms and the subsequent increase from the rebuild, that they'll need to still raise rates. Looks like they'll still do the balance sheet normalization. That's it from the CME Group on the 16th anniversary of the 9/11 attacks. Our thoughts here are always with the victims' families. Cheers, and we'll talk to you next time.